Welcome back, Smarties. You've tuned into Smart Real Estate with Westcliff. I'm Addy Saeed, joined as always by my co-host and trusted strategist, Jaffer. In today's episode of Engaging Expert Insights, we're talking about something critical: risk management.
Absolutely, Addy. Everyone talks about returns, but what separates professional investors from speculators is how they manage risk. We're going to dive into how we assess, mitigate, and structure around risk and share examples where our risk protocols protected capital.
If you've ever wondered what could go wrong in real estate, or more importantly, how to prepare for it, this episode is for you.
So let's start with the basics. Real estate carries a variety of risks, some obvious and some hidden. Number one, it's about market risk, such as economic downturns or interest rate changes. The second level of risk is asset level risk, construction delays, tenant turnover, and then, of course, you have financial risk. Could be bad debt, risks of refinancing, and finally, legal and operational risk, which could be zoning issues or property management failures.
We saw this during the pandemic. Retail real estate took a hit. Financing dried up for some asset classes, but our multifamily holdings stayed strong because we had stable tenant profiles, long-term debt, and stress-tested cash flow models.
It's not about eliminating risk, it's about understanding it, planning for it, and structuring around it.
At Westcliff, we've developed a layered risk management framework to apply to every project. First is due diligence, so financial, zoning, environmental, title. Stress testing. What if rents drop 10%? What if interest rates rise? Reserves. We always build in a contingency for capital. And operator vetting. We only work with proven development and management partners.
And on top of that, we structure deals with aligned incentives. Investors are protected with preferred returns. The GP only earns an upside once investors' capital is returned and targets are met. Even at the investor level, we guide clients to diversify, such as across asset types, including multifamily, industrial, land, across geographies, or across structures, some for growth, some for income, and some for just tax optimization.
For example, an investor might have 100% of their capital invested in single condo project. We would help them reallocate across three deals: one for monthly income, one with growth upside, and one registered fund friend. Lower risk, better liquidity, and peace of mind. If you're investing or thinking about investing and want a risk management strategy behind your capital, book a strategy session at cal.westcliffam.com.
And join our Westcliff Investors Network at win.westcliffam.com. You'll gain early access to new deals, breakdowns of risk profiles, and strategy sessions where we review what's working in today's market.
Returns are great, but protection is power. We're here to help you learn, invest, and manage real estate that's built to weather any market. And remember, this podcast is for educational purposes only. Please, please, please consult with a professional before making any investment or financial decisions.
Coming up next, we'll do a deep dive into actual investment opportunities we're working on so you can see how all of this comes together in the real world. See you then.
Happy investing.